What's up, everyone? My name is Ale. Welcome back to my world of stocks. Every year, I like to give you guys an update on my favorite artificial intelligence stocks for the long term. And that's because I'm a big believer in artificial intelligence and the future potential of it. I think AI is going to run many different aspects of the world, and I think there's a large opportunity there for investment. So I think everyone should be paying attention to it, and we should actively be looking for the best stocks to invest in when it comes to AI too. So in today's video, I'm going to list off for you my top 5 favorite stocks at today's prices. These are stocks that I think are trading very attractively right now, and I specifically try to choose some that have some low risk to high risk. So I'm actually going to rank these from lowest risk at number 1 to highest risk at number 5 to give you a little more variety there in terms of what we're looking for, risk versus reward versus value, things like that. So anyway, it's going to be a lot of fun. I hope you guys enjoy this. I can't wait to dive into these stocks with you guys. But just do me one quick favor. If you guys are enjoying the channel, please help my channel survive and grow by hitting the like button, subscribing if you haven't already. It really means a lot to me and it really helps me out a lot. So thank you so much for that support. But with that said, let's jump into this list. Okay, so starting first here with the absolute lowest risk option out of my top 5 great plays on AI. And really, I would say that this is the best overall stock right now, just in the entire market at its current price. But that's going to be none other than Google, ticker symbol GOOG or GOOGL. And I'll get into the AI stuff in just a second, but first, I have to point out here, guys, that this is by many accounts the absolute king of the internet, and yet because the stock has crashed by so much this past year, losing more than 40% of its entire value, the valuation has actually reached a dirt cheap PEG ratio of just about 1, which is not only about 30% cheaper than their own average, but it's even cheaper than the sector, which is just crazy to think about for the clear market leader to trade even cheaper than its peers, which brings me to artificial intelligence. What's the most important resource when it comes to AI? It's data. When it comes to AI, it's all about data, and Google collects by far the most of it. You're talking the most visited website in the entire world with 8.5 billion Google searches every single day. And by the way, those searches tell AI everything about you because you're searching for answers to your own specific questions on a daily basis, not to mention that you're probably entering those searches through Google's own web browser or smartphone platform, since Chrome controls over 65% of the internet browser market, while Android controls over 70% of the mobile OS market, both of which are far ahead of the offerings from even giant rival Apple. And Google even knows your location, since they control 70% of the navigation and maps market. They know what kind of entertainment you like based on not just searches, but also through the videos you watch on YouTube, which by the way attracts more than half of all internet users in the entire world. And they can even store, host, process, analyze, and facilitate all of that data through their own cloud infrastructure platform that already commands the 3rd most market share in the world there as well. And of course, it also provides all sorts of AI and machine learning services to their customers too. But Google also uses all of this data just to improve their own businesses too, like using algorithms, for example, for their media platforms, or to improve the effectiveness of their digital advertising business, which of course they also happen to control the most market share of that market too. But they're even using it for more ambitious things like autonomous driving with their Waymo division, healthcare and biotechnology through Verily, DeepMind, and Calico. These are all subsidies subsidiaries of Google who use AI to predict diseases before they're even diagnosed, as well as improve the accuracy of medical procedures and even the efficiency of medical records and how they're stored, analyzed, and processed. And so just like oil is the primary resource of the energy market, well, data is the primary resource for the future of AI. And for that reason alone, Google should be at the very top of any AI investor's list. But moving on to stock number 2, we're going to add just a touch more risk here to our list and follow up with the almighty Amazon, ticker symbol AMZN, Amazon stock. And to be honest, during normal times, I might actually prefer Microsoft to be on this list instead, which would take that number one or number two, like really low risk ranking. But the fact of the matter is that right now, Amazon as a stock is insanely cheap, and I think that makes it a better all around play at today's prices. You're talking about a crash here that over the past year has caused Amazon to lose more than half its entire value, leaving them at a price to sales ratio of less than 1.8, which is way lower than the over 9 that Microsoft trades for, or even their own 5-year average of 3.3. And I know that's not based on profits or by a PE ratio, but what you need to understand is that Amazon has always focused more on world domination first and profitability second. So their PEs are always, they've always been high, but I don't think I've ever seen their PS ratio this low. In fact, this entire crash is despite the fact that Amazon already generates about $500 billion in sales and are still somehow growing by a double-digit percentage every year. Mark my words, guys, when the day comes that Amazon wants to focus on profitability, this is going to be one of the cheapest stocks that money can buy for what you get in return. And when it comes to artificial intelligence, well, make no mistake, Amazon is using AI for virtually everything they do. Whether it's using it for algorithms that recommend products to customers on the world's largest online retail store that commands over half of the entire US market at 57% versus the next closest competitor in Walmart at just 6%, or using it to target the right audience with their digital advertisements that has already helped them grow into the third largest digital advertising player in the world in what is now a triopoly with Google and Meta, or by using it to optimize their warehouse efficiency and complex delivery network by keeping track of all their products, forecasting customer demand, assessing availability, and allocating the appropriate amounts. They use it to optimize their delivery routes. It communicates with customers through chatbots and different things like that, while also tracking the entire supply chain. They use robotics for both their own warehouses, as well as selling them now to customers as a home service robot. It's like a new thing that they're offering now. They have Alexa, which is a very commonly used virtual assistant that can be used through their Echo smart speaker products or their Fire TVs and tablets. It can be used on your smartphone through their app or even through third-party products too. And of course, their AWS platform that has already gained the most cloud computing market share in the entire world, which offers all kinds of AI services to customers that help with things like genomic research, drug discovery, there's design, manufacturing, risk management, business efficiency. The list just is endless, really. And they've even used their cloud platform to build virtual supercomputers that are sometimes even faster than their real world counterparts. So you add up the very large footprint that they have in AI with an unbelievably giant and dominant business and a historically cheap stock price, and I think what you have here is one of the absolute best plays on the future of AI in the entire stock market. All right, now those were my two lower risk options, but let's heat things up here a little bit. Let's start adding some risk to our options. For stock number 3, I'm going to go with Meta, ticker symbol META, because as far as artificial intelligence goes, well, this one is super obvious. I mean, not only does Meta have the second most digital advertising market share right in between our other two picks of Google and Amazon, where they use AI to better market ad products to potential customers, but all of that runs on their social media platforms consisting primarily of Facebook and Instagram, which collectively give Meta the most social media market share in the entire world, housing more than 3.7 billion users across all their apps. That's about half the entire world's population. I mean, do you have any idea how valuable that is for AI? We just got done talking about Google and how important user data is for the future of artificial intelligence. Well, Meta also knows just about everything about you because of your social media accounts, your profiles, your posts, your messages, and overall all of your interests and activities and everything else you do online. So not only will that be used for their own AI purposes, but when it comes to algorithms, Meta likely has some of the best algorithm technology in the world, which they invest billions of dollars on every single year, with a massive $25 billion spent last year alone on research and development. Unfortunately, the biggest chunk of that is now going towards building out the metaverse, which included, by the way, building the most powerful supercomputer to run it all. But at the moment, this new venture by Meta is just not going very well for them as it still generates heavy losses. But it could be argued that the future of AI will heavily involve the metaverse, which is a virtual world that will undoubtedly be run by algorithms and all kinds of AI technology. And there are several estimates out there that value the market in the trillions of dollars over the long term. So the fact that Meta is investing more money than anyone else in the world on it, having already sunk over $36 billion on the project, that could actually lead to some great opportunities for them in the future. On the other hand, this is really where all the risk comes in for Meta, because if the metaverse ultimately becomes a flop, then you're going to be left with a very low growth company here that just blew away tens of billions of dollars that could have been invested in other growth initiatives. However, I would still counter that by saying that they can afford to take this chance, as the other parts of their business still generate insane profits, doing almost $60 billion of operating cash flow just last year alone. Plus, the heavy investments into the metaverse have caused the stock to get absolutely destroyed, having already lost more than 70% of its entire value, which is now leaving a very attractive entry point. In fact, the stock has fallen by so much that Meta themselves even went out into the open market and bought back a staggering $44 billion of their own stock. So at least they believe in their own future. And by the way, that was at a much higher stock price of over $300. Today, it trades for just around $100. So given all of the above, I just think that Meta deserves a consideration here when talking about a riskier but still very solid bet on the future of AI. Okay, now for stock number 4, I'm going to go with another stock here that I consider to be relatively medium risk, and that's going to be Nvidia, ticker symbol NVDA, who, unlike the other companies that we've talked about so far, Nvidia is much more focused on the processing power that will be needed for AI, as well as some of the software infrastructure too. But on the hardware side, Nvidia develops the world's highest performance graphical processing chips, otherwise known as GPUs, that can process giant amounts of data at extremely fast speeds, which will of course be heavily needed for the machine learning, deep learning, and all the algorithms that we've been talking about so far when it comes to AI. In fact, all the companies that we've listed so far up to this point actually use NVIDIA chips themselves in some way, especially for their massive cloud computing servers, as well as in their own supercomputers. Remember when I mentioned that Meta is building the fastest or the most powerful supercomputer in the world? Well, that's literally powered by NVIDIA, and it'll be using thousands of NVIDIA GPUs inside of it. But it's not just Meta. NVIDIA already powers more than 70% of the fastest supercomputers on Earth too. And like I said, it's not just on the hardware side. NVIDIA also has some of the best AI software in the world, including an autonomous driving platform that is already used by nearly 400 different companies and institutions, including automotive giants like Volvo, Mercedes, Hyundai, and more. They also have their Metropolis Vision AI platform for the future of smart cities that helps with things like logistics, public safety, sanitation, transportation, and a lot more. Much of that is actually video being collected and processed, which is the specialty of NVIDIA GPUs. There's also their Omniverse platform that not only helps companies integrate into the metaverse, but it also takes real-world environments and transforms them into a 3D virtual version, which has even been adopted by Amazon so that they can improve their warehouse efficiency in the virtual world before making any physical changes to it in the real one. And of course, who can forget gaming, which will be one of the biggest forms of entertainment in the metaverse, or cryptocurrencies, which will likely be one of the most used forms of currency as well. Well, Nvidia, their chips are always being used for both high performance gaming as well as cryptocurrency mining. All of these various markets have so much future potential that Nvidia estimates that their total addressable market will be worth over $1 trillion, yet they're only doing about $27 billion in sales for the 2022 fiscal year. So that's like 27 times larger of a growth opportunity. And yet, because of the current economy and market conditions, Nvidia stock has experienced a monumental crash this past year, losing more than half of its entire value. Long term though, I still think it'll be a winner. Alright guys, that's going to leave us now with the final option. And for this one, I'm going with a high risk play in the cybersecurity market. And I think the best option here would be Palo Alto's Networks, ticker symbol PANW. Now, their stock has not fallen anywhere close to as much as the other companies that I've talked about so far, as they've only dipped about 30% from the top. But the thing about Palo Alto is that they're already the market leader amongst their peers, despite being such a young company, doing about 3 times the sales of the next closest competitor in CrowdStrike. Yet, when looking at the price of the stock compared to those sales, Palo Alto actually trades at a PS ratio of less than 8, while the others are in the double digits, except for Okta, who is actually slightly cheaper. But you have to consider that Okta has been losing more and more money every year on the bottom line, while Palo Alto has actually been improving over time and even reached profitability this past year, which I'll show you in just a second. And so while the others are dealing with heavy losses, Palo is actually expected to continue growing their EPS by over 25% a year, and it's why even the most bearish analysts have the lowest price target on the stock that is still higher than where Palo trades today. And when it comes to AI, well, cybersecurity is all about that. In fact, just AI alone is expected to be worth over $60 billion in the cybersecurity realm or market, while the larger overall broader market of cybersecurity might even be worth trillions of dollars, according to a new survey of thousands of companies that address all the various segments and needs that go into cybersecurity, as you can see on this chart here, or this picture here. And to take advantage of that opportunity, well, Palo Alto is already using machine learning to automate the detection of online threats much faster and more efficiently than a human ever could. They also use a unique multi-platform strategy consisting of Prisma, Cortex, Strata, and Unit that together give customers more choice and simplicity over their own platform security, which is exactly what's needed in the market as it consolidates to fewer and larger players. And like I said, Palo is arguably the biggest, with already giant customers like Amazon, Microsoft, Google, Oracle, and even Alibaba, who are all trusting it for their giant cloud infrastructures. And yet, despite being a leader, they still grew sales by close to 30% last quarter, even during this global economic downturn, which is really being primarily driven by their next generation platforms that grew its annual recurring revenue by nearly 70%. So their investments into AI and all this new technology is really paying off. In fact, it's paying off so much that free cash flow also continues to rise by more than any of their competitors, which is allowing them to invest heavier back into the business while also buying back their own stock as it dips. And it was also their second consecutive quarter of GAAP net income profitability to top it all off, which is really something that their competitors are not achieving. As artificial intelligence grows, more and more cybersecurity will be needed to protect it. And I think Palo Alto stands to benefit greatly from all of that over the long term. But there you have it, guys. Those are my picks for 2023 artificial intelligence stocks. These are the ones that I really like right now. Share with me your thoughts down below. Which AI stocks do you guys like? You know what? Maybe I can make a separate video, some of the stocks that you guys recommend down there. So let me know which stocks you guys like. I could do a separate video for you guys on those. But anyway, I hope you enjoyed the video. Thank you so much for stopping by. Now we'll catch you guys in the next one. Hope you're all doing well. Take care. Bye-bye.